4/12/2013, and we waited on CPI data. Today's CPI data, as you see, they were waiting it, and today's CPI data came at 5%. 5%. So let's do this. Let's write it down. 5%, right? 5 or 0.5, I guess. That's really what it was. 0.5, right? And our interest rate is at 4.75, I think, right? And in order to beat inflation, we have to be below that interest rate. Okay, let's put that up here. So, in order to beat inflation, we have to be below the interest rate. And we are at 5 point something. Going into CPI data, we came in at 5. And the interest rate will probably be raised next month. If not, we're looking at the last interest rate hike. The last interest rate hike. In order for the market to come down, the Feds have to stop raising interest rates. That means that all the damage is done. So, could it be a possibility that they wait until next month, and if this 5 point something gets down 4.75, they don't hike anymore? If they don't hike anymore and they stop hiking, they take a pause, will the market then, with Friday's bank reports and all that, will that push everybody to actually start selling? Remember, when they sold off this day right here, we had the unemployment, and the unemployment, which this is the unemployment came in actually high. Came in high. So it came in with more unemployment than employment. So that's actually good for the scenario for the market to actually come down, because that's what the Feds want. The Feds want the market to come down. And what does the market want? They want them to stop raising interest rates. So if they stop raising interest rates, can they actually let go of the market? Yes, they could possibly let go of the market. We still had this target up here, and it still hasn't hit. But right now, we're just running on time. And look, if today that CPI came in hotter, I think we would have took off today. And it looked like it was going to take off, but then it did a bamboozle and came down and literally sold off. So the scenario was that we came back down. We actually swept that 2 hour. Let's go 2 hour and see it. And we'll see what it did. We had the target up here. Had our target up here. And I said, well, this is a sell to the downside back to 8:30 candle. And then it held the 7 a.m. candle, came back up, right, into New York. But then I said, wait for London's close. London closed at the lows and held the low. It was kind of odd the way they held the low. Because if you go on a 15-minute, it shot up straight up. See that straight up shoot up? So it was suspect. But like I said in the chat, I said if you take the high and low, it's looking like they're waiting for that Fed meeting, Fed minutes to drop. And in the Fed minutes, they said there's a possibility that they won't hike. So what we had a high, we had a low, and halfback. So we did the whole rotation, high, low, halfback. And let's go on the 2 hour. Boom, right there. Let's take this high, right? And that's why I said in the chat, I said, listen, we're on the backside sell. Be careful. Right to the point. It got up here and then sold off. If you looked at it, you could see it. That this is the first time, right? And the only way I said that, oh, this could possibly be a buy if London's close was at a halfback right here. But they sold it to the downside and then they took it up. Look at every other day. So now we're here and we can't get above this halfback. Why are we filling this halfback and then we're filling this halfback? You understand that? Double tops right here, right? And the fact that we're looking like this. We're up, we're to the downside, and then we're filling halfback. Remember, at 42 is very important. Once we started filling that 42, it was a wrap. It was the previous month high. And right here is 40 is really halfback. But that 42 right here, when it started going under 42, you should have been like, well, if we're not holding 42, we're not going up to the upside. That CPI data was it right there. The cause of this was the fact that it came in lower, way lower. It's 6.6, I think, last month. If you look at the report I posted up, like I said, I do put up the numbers of that. And it came in at 6. Remember, it was 6.5. I used to have it on the chart, 6.5. Now it came in at 6. Now it's at 5. So that's a drastic move. I think last time it came in at 6, we made the move to the highs. Right? Well, no, I took it off the charts, but it was there, the numbers. It was 6.5, 6. So progression was there to the downside. So the possibility of them releasing the market is still there. And if we look at the yearly, now we're looking at the possibility of this becoming a big sell-off. So right now, I mean, we're up here at these highs. Tomorrow's CPI data, and then Friday earnings on the banks. Can we possibly get a big watershed moment to sell off? We could possibly get that. We could possibly start progressing to the downside and start failing halfbacks and doing the opposite of what we did down here. Now, now this was it was looking like it was coming up, but right now it's starting to look like we are head, shoulder, shoulder. I mean, now it's starting to look like that, and possibility of rolling over is in play right now. The Fed's minutes said that they had a possibility that they won't increase interest rates if the data came in how it did. Now, core price index is really what they look at. PPI data, not so much, but if that comes in less too, then we could possibly look at a big move down. It had had these plays all the way up. So look at what happened. Let's take this 11 o'clock candle, right? Went up, right? Boom. Came up all the way to the top side and then sold off. But then if you look at 1300, right? Because look how this didn't look right. It really didn't look right the way it shot up. And I think they shot it up into the Fed meeting minutes. And then if you look at 1300 candle, boom. Straight sell-off, even though the minutes. And remember, I said if we stay under 46, which was this price right here, 46 was key, and I thought they were going to sell it earlier, but I forgot about the minutes, and they brought it back up for the minutes. And if you look at it, we failed 46 here. I mean, this 42 area. No, it was 46 right here. They failed this 46, right? And it went straight down. Then it came back up for the minutes. So when it came down here and they just kept going, I was like, oh, it fails this area. We're going down. And we did have a price. Let me put MES. It looks a little bit more. There go MES right there. So the fact that it came up here and you could see what it did, it literally hit that 7 a.m. candle down here on the way down on a smaller time frame, rejected it, and then it was rejecting 29.50 or 29.10, which is literally this 1500 candle has been holding all day, like, which is this low right here on the 2 hour. Where are you? This big massive candle right here. I think that's it. Yeah, that should be it. So it was holding the low, that the middle of that candle. We stretch across. Remember, that is, and I said if we fail there, it's going to flip around to the other side. Wait, that wasn't it. It wasn't that. It was Fridays. Not Fridays. This area right here. Where was it? It wasn't that price. Anyway, I'm getting myself lost in this chart. It was the 29.50 area that kept holding. Oh, it was this price. It was this London's close right here. This is what it was. Right here. And that's even more important. No, that wasn't it. Anyway, I don't know why I'm lost there. I am lost. I had it marked and I deleted it from the chart. And that's what happens when I delete stuff from the chart. It usually doesn't work out. What was this candle? It's 29. Yeah, it was 29. 21.29 was the target price right here. Or 27. Okay, let's do this like this. Keep it like this. I might have had the wrong price on here. There we go. There it goes. That was it right there. So remember, this is last week's. This is last week's close. So if we are below it, that means we're making lower lows. And this move right here in Tuesday, they sold it down and it came back up. So they've been, that's like literally the halfback from last week. So last week we were about to go down to the downside. Actually, it's 2 weeks ago. We were about to go down to the downside. They bought it up. And this is the week that they reported unemployment. So unemployment got reported. They ran it up. Unemployment was good. They sold it down. Boom. Right? Once they sold it down, last week, they ran it back up. Boom. Ran it back up. And then boom, sold it back down. And then today, when it did this, you're literally looking. Remember, last week was a holiday. This was the holiday price. And they're trying to move it up to the highs to see this price again, which is literally the same thing. This has to do with inflation. Unemployment was good. They sold it. It was up. They sold it. CPI was down. They sold it because all that is for inflation. So, you know, the key factor here was like if unemployment was going to be higher, it would have gone. You know, employment was higher, it would have gone up. But unemployment was actually higher, so they sold it down. Same thing with the CPI data. CPI data came in lower, and that's all good, saying that that's going to push the Feds to actually stop raising interest rates. So this was for interest rates, and this is for interest rates for them to stop. And that's the whole scenario right there. So look, even at this time, they sold it down. We never went to a halfback. We got close, and they were still selling near those highs. That's why I say you got to be careful at these highs. But I thought that if CPI came in hotter, we would have gone to the highs. It came in lower. And as I said it, I said, well, this thing's in a sell because it went back to halfback of the 2 hour. Now, if you go on a 2 hour, then you start seeing that they were holding, they sold it, and then they were buying it up into the end of the week, saying, hey, we got CPI data, we got the banks coming, we're not going to sell yet. As soon as that release, boom. And then they did it again. So here, CPI data is really what they're depending on. And if you see high, low, halfback, and that's the first time we have that. So if we were high, low, and I said if London closed, if we got a London that closed here, even if we don't care about the CPI data, they didn't care about it. If we had London closed down here, like we moved up, we were moving up. And if we would have moved up here and had London's closed here, this move would have been up towards the upside. And we would have had a big move to the upside like this. But the fact that that CPI data came in as low as it did, that's literally saying that we're close to controlling inflation. So the possibility of controlling inflation is there. So next month is going to be very key to see what the Feds do if they move. I think they're still going to increase it by one more percentage because it's got to go above that number. But say that the number drops below it and they still increase, that means that the end is near. So even if the end is near, you're looking at what? At a big drop now, right? At a big drop and then a bounce and then selling off into October and then still the move into October into December, finishing off the year good, expecting, and that's what the market expects, them to stop hiking by the end of the year. Not stop hiking, but start lowering down the interest rate by the end of the year if things recover. Right now, things are starting to show up bad, and right now, everybody's forecast for earnings is actually very, very low. So stock prices could literally come down very dramatic. Remember, the way up is slower than the way down. So if you see the way down, it's going to happen a lot faster. If you look at these big drops, interest rates started getting hiked. These drops are literally 1, 2, 3. 3 days we made at least 3. This is literally 44.60 to 41.30. So that's almost 300 points right here. And then we bounced, and then we did another one. So 42.80, and then we dropped another 300 points right here. And then this was literally this drop and that drop put together. If you take this high and you go all the way down to this low, that's possibly the same drop. Almost the same drop, close to it, right? So the drops are there in total that this is 600 and this is 600 points. Now remember, last time we dropped was this area right here. When I think they flicked it and said, oh, we're going to reduce the interest rates. And they still dropped it. So this is the talk about, oh, we're thinking about reducing the amount that we're increasing the interest rates from. And that was a big drop. Now you're looking at the 25 points, 25 points, 25 points, and then the last one over here. Can we possibly get that drop from here to there, taking out that low? Yeah, we could. We could get that amount right there, and it could happen instantly. We could get a 300-point drop and another 300-point drop, which will literally put us, if you see 300 points, half of this line right here puts us at this low that we've been trying to see. So the low, that big candle that they had. So it's the possibility is there that we might have this drop coming. Tomorrow's PPI data and then earnings for banks. We'll see what happens on it. Let's set up for London's close range. Now you got to think also today it's going to be something interesting in Asia because we did go past the closing range. It sold off into the closing range, even though this isn't, look, this is 11 o'clock and this is London's close right up here, right? Look how far we sold off from. So let's do right there. And we talked about how we're going to have a big range now. Look at the range now. And we are below London's close range. Look at the range now. Now we have literally from that high to this low is, I mean, it's 30 points, right? But say that we had a complete move all the way down and we come down here, that's going to be a nice move of almost, we should get a 100-point move sooner or later, possibly into the banks. Now, what it's looking like is that they're already anticipating the banks to be bad. So what we could possibly look at is selling into the banks' earnings. So instead of buying, they'll be selling into their earnings. So don't look for a long in this unless it shows it. Now, right now, we are below a lot of things. So I'll be keen on this candle right here because we're below it. And it could just, dangle here into tomorrow for the CPI data. Not CPI, PPI data. So we'll keep an eye on that candle to see if we go there. We failed that candle right there, which held up right here. That's an 11 o'clock candle. Oh, I did that wrong. See? Actually, that candle is humongous. See? That candle is humongous. And we're already rejecting the half back of that candle. Right there. So, I mean, it looks like we're possibly going to get more continuation to the downside. If not, we'll trade higher, but I think we hit this price down here at 41.10. That is, now if we do trade higher, it's probably going to go to that price. Asia will probably want to get this high, a little bit higher, and once it hits there, maybe into Asia, into midnight, we get a move down. So we're possibly going to get this up and then down. This is near London's close right here, right? Let's go over here and look at where it's at. This is actually 1500. That we're way past London's close range. London's close is all the way up here, which I don't think we're going back up there. So this could literally continue to sell off. Do we have London's close? Yeah, we have London's close right here. It's right at the same price. So yeah, that possibility of hitting this price down here is pretty keen right now. We could possibly hit that price, 76. And down here, sorry, this is actually London's close right here. So we got London's close right here. Remember, London's open, we'll try to go to this price. And if it gets here, and if we don't sell below it, that means that we're going to go back up. So possibility of hitting there is key. And Asia will want to get the highs to sell the highs and then come back down here. And that's London's close right there. That's also 11 o'clock candle. So the possibility of hitting there is right there. We're above it. Asia will take it up and then come back down. Let's look at we had our range. If we fail there, then it's literally going to come all the way, down. Remember, held here 11 o'clock, held here 11 o'clock, held here 11 o'clock. London's closed, London's closed, London's closed. If we break here, we're breaking to the downside 100%. Breaking to the downside, and we're going to go to the lows. Because that is the last straw right there. Now, can they hold it up into that report? Yeah. And then come down into New York? Yes. Because as you see it, New York sold it very aggressive, and we went through the range, and London closed it, took it all the way up, and people sold into that buyout. Now this is on a bigger time frame. If you go on bigger time frames, that's looking at the sell. Below Stangham line right there on the 4 hour, right? Below Stangham line on a 2 hour. Everything is below right now. On 1 hour, we're below it. Can we pull back a little bit? Yes. Can we still continue to sell? Yes. It's been trending upward and has to fix itself down here. If you go back, remember, this thing took off all the way down here and left a lot of halfbacks untouched. One down here, some down here that didn't get touched. There's a lot that didn't get touched down here. A lot of halfbacks on 30 minutes. It just continued to move up. And if you go on higher time frames, you'll see that right here, they ain't touched. So maybe possibility getting down here is there. This one didn't get touched. So that's 4,100. We have a lot of stuff that was left untouched down here. See, look, there's a lot at 4,100. So, and we're right there at price. So the possibility of this continuing down is possible. That is there. It could wait until tomorrow for that PPI. The PPI data, and then we sell off into earnings of the banks, or they hold it up and then sell into the banks. As you see, they waited for a report. They waited on a report, and then they got what they wanted. So that they're getting what they want. Hopefully, the Fed's getting what they want, and then we get the move down. It's been moving up, but look at on the daily. If we get another red day, where are we going? Down here. Why? Because Stangham line is here on the daily, and we failed the highs. Now that's 1, 2, 3, 4, 5, 6, 7. We are almost done with the week, and we are not above that high. So we're above the high. Where's halfback? Now this is halfback of prior month, right? This is the highs for now. Let's see where halfback falls. Right down here. Boom. Around 40.67. Which all lines up with this price down here. So we fail down here, probably hit here, bounce up. So do a possibility of this scenario happening, which I'm going to get rid of these highs because I don't need these prices no more. I don't need those lines. Do not need that line. We already played that line, right? Yeah. This was the sell up there. Let me see where's that on the 30 minute. I'm going to leave that one there. So now the possibility is of what we're looking at is maybe Asia goes up to the highs, right? Maybe possibly up here. I mean, it's not that far-fetched. And then we come down here into London's open, PPI data, they run it up, and then fail down. And literally, look what we're doing. This is a daily candle. Right? The daily candle that we can't get above, apparently, right? Look where we're at. Are we going to go back to halfback? We just failed the high. So we failed the high, we're going back to halfback. Yes, possibility we're going to halfback tomorrow. Then what are we going to do? We're going to do a little bounce possibly or sell completely off. But we should be sweeping the low. Why? Because look, half high failed, went to halfback, went to halfback. I mean, went to the high, failed, hit halfback, went to the high. We're failing the high again. We're failing the high, and look where they were selling. Look where they were selling. They sold the highs. Where's the possibility that we might pull back up? Say we pull back to half of today's candle. It'll be right there. And then boom, come down. London can't sell. London's closed. Boom. New York into the report, fakes it out, wakes up, comes back down, and we fail that low. And that's what we're looking at right now. Also hitting the Stangham line. So the possibility of having that is very likely. All right, that's about it. We set up for London's close right there, I think. Boom. We got it. We're looking like we're going for a move down, and we're below. Remember, we're below. This is last Friday's. Last Friday's close right here. This is the price. And we're below it. Try to get below it, win above. Below it, win above. This was indicating that we were going to make a higher high. Did we do that? No. CPI data came on bad. That's what we're doing. We're literally selling to the downside now. Why? Because we can't keep up this high. So for 2 weeks, remember, we're going into Thursday. This week, we ended on Friday. We were just barely green, right? Monday we came in, they sold it off, and they pushed it back up. Now we're going into the middle of this week. We're at the middle of this week, and we're not above these highs, and we're below this price right here. Closing. We didn't close this day. Below it, boom, came above it. This day, didn't close below it. The week, we didn't close below it. We closed above it. Remember, this is Monday, right? Monday, above it. Going into Wednesday, we were below it. Price should have continued to go down. It did not. Into Thursday, it boosted up. We closed Friday above it, saying that we might make higher highs. Boom. Going into Monday today, look, we're above it. We're going to make higher highs. We look like we're about to take off. We're about to take out that price. Went up there. Now it looks like a double top, and we're breaking the low. So we're breaking this low. Can we possibly come down to these lows, which is literally the low of that? And then that price right there literally indicates where does it fall at too. Falls at halfback. Break that halfback going into the end of the week, we could have a big sell-off right down to this 40.81 or the 40.76 area. This area right here would be keen if we fail that halfback. Okay? That's about it. Have a good one. We'll see you tomorrow. Safe trading.